You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. The Options Insider Radio Network is sponsored by Fidelity Investments. Fidelity's Option Trade Builder tool can help you confidently build an options trade in 3 simple steps. Just choose a strategy, select a contract, and then review the benefits and risks of the trade. Learn more about Option Trade Builder at fidelity.com/options. Options trading entails significant risk and is not appropriate for all investors. Certain complex option strategies carry additional risk. Before trading options, contact Fidelity Investments by calling 800-544-5115 to receive a copy of the characteristics and risks of standardized options. Fidelity Brokerage Services, LLC, member NYSE SIPC. Welcome to Volatility Views, the premier program for volatility traders. Each week, we'll take a deep dive into the world of volatility with in-depth analysis, trading activity reviews, strategy breakdowns, cutting-edge education, and much more. We'll also bring you exclusive conversations with the traders, researchers, and asset managers who are reshaping the volatility landscape. If it involves volatility, then you'll find it on Volatility Views. Volatility Views is brought to you by MIAX, one of the fastest options platforms in the world. MIAX is now trading options on the SPIKES Volatility Index, offering pinpoint accuracy, radically faster dissemination, and a highly transparent settlement auction for confident trading, all for competitive exchange fees. It's time to make a change and give yourself an edge with SPIKES. Learn more about SPIKES at www.miaxoptions.com/spikes. Options involve risk and are not suitable for all investors. The statements made are provided for information purposes only and are not intended to provide and should not be relied on for financial or legal advice. And now, it's time to take a deep dive into the world of volatility. It's time for Volatility Views.
All right, everybody. That music means it's time once again for Volatility Views, the premier program for volatility traders. My name is Mark Longo from the OptionsInsider.com, as well as, of course, from the ever-exciting Options Insider Radio Network. New time for you guys here listening live, 1 p.m. Central, 2 p.m. Eastern. Moving it from our old noon Central, 1 p.m. Eastern. I apologize for the confusion. If you're listening after the fact on the podcast, which I know most of you are anyway, you won't notice any difference. But if you do want to join us live, it's 1 p.m. Central. Maybe playing with that time a little bit in the near future, trying to be kind to our friends across the pond there, who it's a big time gap for them over there. You'd like to at least be awake when you're doing the show. It's a nice thing to do. So at least for the time being, 1 p.m. Central, 2 p.m. Eastern. There's going to be some time changes coming up, of course, with the daylight savings and everything. So that may mess with the system. But for now, 1 p.m. Central, 2 p.m. Eastern is where you can get us live, of course, after the fact on any device pretty much on the planet. Get the podcast, including our mobile app, the easy place to get all of our shows, not just this one. And of course, however you listen, live after the fact, we don't judge. We just want you guys to reach out to us. If you like us, you like what you hear, leave a review on your platform of choice. And, of course, send us your questions, your comments. We do indeed like to hear from you guys. And joining me on the program, we got quite the crew joining me on the old Volatility Views program today for this new bat time, same bat channel, though. Let's start off with our old friend, the Greasy Meatball, Mr. Mark Sebastian from OptionPit.com by way of Carmen Line Capital. That's Carmen with a K, listeners. Mr. Greasy Meatball, welcome back to Volatility Views, sir. How go things in the land of the pit?
You know, I'm excited because tomorrow is my national holiday, and I'm very excited for it. It is.
Is it Meatball Day?
It's National Meatball Day on Saturday.
Oh, well, there you go. How are you celebrating?
Everybody, I want to invite you all to go out, have a meatball in my honor. And if you don't, then I take that as a snub, nay, a slap to the face. So go out and get your meatballs, folks.
There you go. The greasier, the better. Are you going turkey?
Indeed.
You going turkey? You going regular?
No, we're going to go regular. These are going to be pork, beef, and veal.
Yeah, you got to go regular for National Meatball Day. You can't throw turkey out on National Meatball Day. No. They'll take umbrage to you.
Sometimes I'll swap out the pork with sausage instead of straight pork, which adds some nice flavor. But I'm depending on my audience, sometimes I'll use lamb in place of veal for people that are like, well, I feel bad for how they treat the little baby cow, so I'm gonna eat a baby lamb instead. But other than that. That is how I execute a meatball.
There you go. National Meatball Day. Maybe you go out to the Option Pit HQ or Carmen Line HQ, and maybe you see if you get yourself some free tasty meatballs courtesy of the crew over there. Speaking of the crew, we got a good crew, like I said, joining us. Also joining us, a return from last week, Mr. Shelley Brown, the Executive VP over there at MIAX, a.k.a. the Miami Options Exchange. Soon to be an equities exchange, I hear. Now, so, Shelley, you guys are busy. You launched your third options exchange. I hear rumors of a stock exchange. What's going on over there, Shelley? Lots going on in your neck of the woods.
Lots going on. Thank you for having us again. Very excited about the new options exchange, Emerald, which launched on Monday. We'll be listing 4 big classes come this coming Monday. But, yeah, in expansion mode, hoping to launch the equity exchange late this year, early next year.
And you even got some crazy vol product to talk about here. And to help us do just that, we are also joined by our other co-host. He's been on the network before, but this is his first official time in the big chair, in a co-host chair. He is Simon Ho, the CEO over there at T3 Index. Simon, welcome to Volatility Views to you as well, sir.
Oh, thank you for having me. It's great. And congratulations, Meatball, for tomorrow.
Thank you very much. Thank you very much. Although, actually, it may be already tomorrow there. So where you are, I believe it's already my national holiday, because you're ahead of us, right?
I like it.
I like it. And I'm going to honor it by having a meatball today.
All right. Thank you.
That's a good plan.
Thank you very much.
He's fitting in with the show already. I like it. All right, since this is first time in the big chair, let's dive into what's making all that fun stuff tick with our Volatility Viewpoint segment.
It's time to welcome thought leaders from throughout the volatility trading world. It's time for Volatility Viewpoint.
All right, everybody, welcome to the Vol Viewpoint segment, the portion of the show we welcome on guests from throughout the world of volatility and proceed to pick their brains for the benefit of you, the listener. And last week we had Shelley kind of talking the big picture, but we're going to have Simon joining us on the show going forward as well. And Simon's kind of the architect. He's the Dr. Frankenstein, if you will, of the monster that is Spikes, a good monster, a fun monster. So we thought we wanted to get him on to kind of talk about what makes it tick, some of the underlying mechanics that really brought this thing to life. So Simon, let's start there really quick. If our listeners missed your appearance last FIA on the network, why don't you go ahead and give an overview of your background, what it is you guys do at T3, and then we'll get the ball rolling, diving into the nitty-gritty with Spikes, okay?
That sounds good. So my background is I've been an options trader for 25 years at the major investment banks, mainly in FX, commodities, and a little bit in equities. So eventually, I'm Australian, and so when I moved back to Australia, I decided to set up a company that would trade vol exclusively. I'm extremely passionate about trading volatility. I love it. It's the only thing I have done since I left school, and it's really the only thing I can see myself doing until I stop doing stuff. So I set up a fund that trades just VIX options only. So we've been doing that since 2010 for clients. We have funds and things like that we run off that. And our core competency as a business is our analytical capability. So we spent about 5 years with one of the world's leading Bayesian econometricians to develop forecasting tools. So our forecasting tools, relative to public literature at least, are very good and very accurate at forecasting vol. So we use that as the core engine, and we have optimization algorithms as well. About 4 years ago, though, we started to see, we live and breathe volatility, and one of the things that we thought was, well, look, VIX is just such an amazing product. It's really taken the world by storm, one of the most liquid products in the world on any given day, and yet there's no competition. So we set about trying to see if we could disrupt that market and improve things and lower costs for clients. Ultimately, that's one of the main bugbears of people is that, the prices are fairly high, and that's frankly in any part of an economic system, if you have a monopoly arrangement, that typically tends to happen. So that was kind of the inspiration for that, and we've developed a number of volatility indices as well that we're looking to commercialize. With interest rates, we're working with an exchange down under to do a volatility index on milk, believe it or not, called the Milkshake Index, and we're also going to be launching soon a Bitcoin volatility index. I love. Very busy.
Before you go any further, I love the name, the Milkshake Index. I'm all in on that.
Does that bring all the vol to the yard? And this one is better than yours. Darn right, it's an index that's better than yours. You can teach us.
That should be the tagline.
Yeah, no, you got to get, who's that? That's not Kesha? Is that Kesha that did that song? That'd be amazing. You get her to be the spokesmodel?
Yeah, I'll try. I'll see if we can do it.
Unfortunately, I'm lactose intolerant, so I can't really partake of the index, but I can enjoy it from a distance. And the naming alone is definitely worth checking out. We'll have to bring you on our TWIFO show one of these days where we talk futures options. We talk about some fluid milk action, not often. The dairy segment not too active out there, but maybe with this milkshake index, things will change. Speaking of action, I'm kind of curious before we even dive into the mechanics of spikes really quickly. We've had guests on this show from all over the world since it started and talking about kind of what's going on in volatility in their necks of the world. And we've seen burgeoning little volatility hotspots spring up. We all know the U.S. is big. We all know France, for whatever reason, huge with volatility. There's a decent core in Australia. There's burgeoning audiences in and around Asia and Hong Kong have become little volatility hotspots. We haven't really had a lot of guests on the show, on this show at least, from Australia. So what's the volatility scene like in Sydney and indeed in Australia? Is it kind of a small audience of you guys and that's about it, or is there kind of a growing vol trading and analysis scene in Australia there, Simon?
It's relatively nascent, I would say. They sort of focus on the meat and veg down here in terms of financial markets. So something like a volatility index is kind of very out there, so to speak. So it's unfortunate because obviously we would love to be able to trade the more vol-type products, the better for us. But locally, the Australian Stock Exchange, the ASX, actually did list they have an index and they listed a futures contract, but unfortunately it essentially died and withered on the vine because there just wasn't enough interest. And I think the part of the reason for US vol being so dominant is the fact that equity markets are very closely correlated, particularly in down moves, and so people eschew the basis risk in preference for something that's going to be very liquid and will help them to manage their vol risk. So I found that a lot of people in Europe, for example, have told me that they trade VIX despite the fact that most of their exposure is European-based, simply because, as I said, that dividend of having the liquidity associated with it outweighs the specificity of having something that is generic to your local market. So I think that's what ultimately led to the failure of the local version of the VIX.
You're right. It doesn't help if there's a high correlation to your local volatility if you can only get 10 contracts off or something along those lines. So we've seen that problem with other products, you're right, focused on the European market, which is why, again, people still aggregate towards VIX, even though it is primarily a U.S.-centric. But let's get to that. You mentioning spikes here. Obviously, it launched on the 21st to a lot of fanfare. It's been a while since we've had a new player in the volatility space, so that alone is worthy of note, worthy of discussion. We talked with Shelley last week about some of the early days and volume and things like that. We'll get into more of that in a little bit, but I'm curious for you, since you're kind of the architect of this is your baby at the end of the day. Walk us through some of the mechanics of it, why you decided, for example, why you decided to go with SPY, and why you decided to, maybe have a similar approach. Some people these days are trying to go to the old school approach of VIX, which is having products that are just at the money vol, why you decided to keep the skew information there, and then what you guys had to do to maybe avoid some of the issues that we're seeing plague VIX now as a result.
Okay, so there's quite a lot there. So I'm going to unpack the last thing that you mentioned, basically, which was using the at-the-money stuff. So when we first started doing this investigation about 4 years ago, one of the things we thought is, well, maybe if we're going to compete with VIX, we need to offer something that's different. But it was very, very obvious. We've surveyed people for over 4 years, so we've covered pretty much right across the industry of anybody who trades volatility or a VIX. And predominantly they said no, that they don't want an at-the-money type product because it's very, very difficult to hedge. So that was one thing that really put us off from going down that route right from the very get-go. In terms of what we wanted to do, though, we really wanted to improve things if we could, because ultimately, VIX has been a huge success, but there hasn't really been a lot of adaptation or sort of innovation around that pretty much since it's launched. So we wanted to take a real deep dive and look at what we could do to improve things. Now, one of the things that we thought was, well, we can't use SPX options, so that's a physical barrier to us. Obviously, that's an exclusive arrangement between S&P and CBOE. So we decided that we would use SPY. Now, one of the virtues of using SPY is that they're obviously extremely liquid. They track the S&P 500, and at the same time, the bid-offer spread is extremely tight because obviously they price in pennies and it's a very, very popular market. So that was, to us, a very appealing underlying upon which to base our index. We made some very interesting, I think they're very interesting changes to the index to try and improve various aspects of it. One of them is the stability or reliability of the index. There are times in history where the VIX hasn't been able to print for 30 minutes or more, and that has been as a result of the fact that of the way that they survey prices. So we developed a proprietary algorithm that we built into the model called price dragging, and price dragging essentially prioritizes trades over bids and asks. So in fast markets, for example, you might have, you're relying on the constituent options all having a bid and an ask so that you can find a mid for VIX. And what we've done is we've said, well, we're going to prioritize an actual price unless and until a bid has gone through or an offer has gone through that last price, in which case, obviously, that is the more relevant price and it should be updated using that. So what it means is that our index is extremely robust in the face of even fast markets or illiquid markets. And that's something that the byproduct of that is that we can actually now disseminate the index at radically faster intervals. So we update VIX at every 100 milliseconds, whereas the incumbent is updated every 15 seconds. So it's fully 150 times more frequent updates. And that, frankly, is useful information to the market. So that's one of the sort of major changes that we invoked.
And obviously, particularly over the past week since the last time we've all gathered together here on the show, maybe to Mark's chagrin with his prognostication for the end of the show, maybe to mine as well. I certainly wasn't this high either. But we have seen a bit of a resurgence of volatility kind of coming roaring back to life as some of the global macro news weighing on the broad indices. How is Spikes performing? This is kind of its first real, it's not quite a quote unquote spike. It's not an explosion to the upside, but it's its first real resurgence of volatility since Spikes has been listed. How are things performing so far?
Well, as far as the index goes, Shelley and his team have done an amazing job. It really has been flawless. Since the launch, there's been no hiccups, no outages, no nothing. And the index, as it has for the past over 2 years, we've been disseminating it without a hiccup. So really very happy, obviously happy that vol is going higher. As a proponent and exponent of vol, that's obviously far more interesting for us as well to see things moving around. So that's good. In terms of the contracts and stuff, I guess I'll let sort of Shelley speak to that. But I guess we're pretty pleased. We have to be realistic. It's only the second week or so that we've been around, and a lot of people need to do their own due diligence and so on. So we're seeing very positive signs, and certainly feedback from people is excitingly positive.
Yeah, I imagine a lot of people are waiting for that first real settlement too, right? Because that's the crux of the issue these days in the volatility space. So they probably want to see you get one under your belt to make sure all the I's are dotted and T's are crossed, perhaps before they dive in, which is understandable given the current climate in the volatility space. Simon, Mark had an interesting question last week, and I kind of wanted to get your thoughts on it as well. Maybe you have some specific dates for us, because one of the indicators we use a lot on this show is, of course, VVIX, which is the volatility of VIX. Shelley mentioned you have something analogous coming out for Spikes. Can you give us an update on, what you're planning with that and when we could hope to see that?
Yeah, sure. So it's quite exciting. I suppose I can't reveal everything, but there is something that is very interesting about the index. It's quite different in terms of how it's calculated than the current one. So that should be interesting for people. We believe it is a significant improvement on how things should be reflected. At this stage, though, I guess we'll have to wait just for a little while and keep people on the hook a little as to exactly how that is. But yes, absolutely, we've got an index that's called the VSpikes Index. We're very excited to sort of bring that about. And now that, Spikes options are actually traded and quoted, it gives us the capability to construct that index. So we're working with Shelley and the MyX team to get that up and running probably in the next month or so.
Can I just say that while I like the word V-Spikes, I think the fact that you've got the Ike and a V, why not call it like the Viking or something cool like that? Like, a spike Vikings have spikes on their helmet, something awesome.
Yeah.
I'm just saying.
There you go. Free branding advice from the Volatility.
Yeah, there you
Show.
go.
There you go.
There you go.
It's worth big money here.
What's the Viking saying about spike options? How awesome would that be?
That would get some cachet. There's certainly an argument that some of the cachet that surrounded VIX, particularly in the early days, was around that moniker, right? The fear index that people applied to it. People just liked it. It sounded cool. The Viking, it would certainly have some resonance out there. People, hey, what's the Viking up to today?
I'll tell you, it'd be huge in Minnesota.
Yes, it'd be huge in Minnesota, which is at the end of the day where all products live, right? If you're big in Minnesota, you can make it anywhere. Isn't that the song?
Well, that's what I heard. And Meatball, I think I'm going to have to hire you as a marketing manager. That's awesome. That's two sort of clues you've given us today.
All right.
He's got good stuff. Just beware that 5 out of every 10 of his suggestions will be perhaps not safe for work. Just as long as you're okay with that, and then you should be you'll be good to go. Well, the same question I had for Shelley last week too, Simon. Now we're 2 weeks in. 2 weeks under our belt in terms of the product being live and listed and actually out there trading. Any surprises? Anything that kind of maybe you didn't expect coming into this now, or anything kind of take you off guard, good or bad? Anything you weren't expecting so far play out in the marketplace or in the index going forward?
To be honest, no. I mean, we had realistic expectations, as you do for all launches. We just know that it takes time for people to get signed up and all that kind of stuff. So I have to say, no, not really. Things have gone pretty much as we had expected to this point, yeah.
Well, I'm glad to hear that. If you guys out there listening have more questions about specific mechanics of maybe we can get more into the price dragging or the settlement or things like that, hit us up. Simon's going to be joining us regularly on the show going forward once we get all the times sorted out. It's a big time gulf between here and Sydney. So we can always get more into the weeds on future shows. Meanwhile, it's time to keep on rolling into the volatility review.
It's time to break down the latest developments in the volatility trading world. It's time for the Volatility Review.
All right, everybody, welcome to the Vol Review, the portion of the show where we do exactly what the name implies. We break down the week that was and still is from a volatility, trading, and analysis and trending and development perspective. Coming into showtime here, actually about halfway through the showtime now, right around 1:30 p.m. Central. We're seeing yet another day of red on the screen here for most of the major indices, pretty much bringing us in line for our first net down week in quite a while, since January, I believe, if not for the entire year. The S&P off about 0.75% right now, the NASDAQ off similar percentage territory, and the Dow off about a little more than 0.5%. Of course, all this red on the screen means some green when it comes to ye old volatility markets. We're seeing right now, interesting, coming in, there were about 17.5 on the VIX and about 17.25 on spikes. We've seen both of those kind of come in as the show has kicked off, which is good, bringing me a little bit closer, excuse me, to my prediction. I think I'm still going to be off, though, spoiler alert. We're seeing right now VIX right around 17.10 or so, and a little bit shy of that for spikes, about 16.90 or so. So they're staying pretty much in lockstep, which is interesting. Excuse me, still coming off a bit of a cold here. They tend to linger in the winter here in Chicago. What's weighing on the market today? Well, a lot of things. We saw a pretty weak jobs report. Employers added only 20,000 jobs in February. That's well below what they were expecting. About 180,000 jobs was the Bloomberg's consensus. So 20,000, just a drop in the bucket there. Unemployment rate down to 3.8%, which is good. Of course, that's a lot of people coming off the shutdown, the federal workers in January and returning to work. Of course, we're also seeing throughout the entirety of the week continued concerns over the trade deal weighing on the broad markets and driving volatility back up. Some discussion that there's still some missing details out there in terms of the trade deal. And of course, we saw broad macro trends not exactly favorable as well. The ECB coming out saying things aren't exactly going up to snuff over there, talking about some more stimulus over there, which was met with some chagrin. Also China, which is continuing to show that their weakness out there, exports dropping by nearly 21% from last February of last year. That's well below the 5% they were expecting to drop. And we always know there's some issue with the numbers coming out of China as well. So if they're admitting to 21, then it might even be worse, which is another reason why perhaps things are getting just wiped out this week, I think, to put it charitably. Mark, it's been an interesting week from a vol perspective. Vol kind of back in a hurry. What's been catching your eye this week, sir?
Yeah, what's interesting is there's really not a great reason for the VIX to be 18 like it's been trading, or the spikes to be, well above 17, in that we really haven't had that much movement. We had 2 days where, maybe we almost moved 1%. We've had some decent intraday vol, but there really hasn't been that much. It's been kind of just a slow grind lower. What I noticed is that volume is just gone. There's been, so I think the most of this selling and most of this pop in volatility is really related to a total lack of liquidity. There is nobody here, nobody trading, nobody going kind of either way. And so, it's not that hard to push markets around. And, then, the fact that we had such a big rally first, 8 weeks of the year, probably about time for a down week. That's probably a good thing to retrench. But, I do think volatility is going to fall over the next few weeks, because I think what we've now seen with China and the ECB is the Fed's hands are officially tied. There's nowhere they can raise rates. You can't raise rates when the ECB is actually lowering and China is lowering. They're already de facto doing it for you. And so, that kind of is going to do the trick. So I think what you're going to see going forward out of the Federal Reserve is that they're done for 2019.
Yeah, it would be kind of strange to see us pumping the brakes when everyone else is trying to step on the gas around the globe. It would be odd, but stranger things have happened. But you're right; the consensus does seem to be like the Fed, through no maybe desire of their own, being forced to pump the brakes on themselves, I should say, rather than on the economy going forward. Simon, it's your first time on the show, so I'll give you a chance to chime in here as well. What is catching your eye in the broad volatility market these days, sir?
Okay, so from our perspective, something that stands out is the vol is kind of towards the bottom end of the range for the past 5 years. And I think that what's being set up now, notwithstanding the comments that Mark just made about shorter term moves, which I do agree with, I think on the whole, though, that owning volatility at these kinds of levels probably does make sense, especially with vol so low. And maybe you wait for VIX or spikes to get back down to sort of 15-ish. But I just think that the carry on that would be fairly minimal for people who are looking to take out some sort of longer term protection. So I actually think this is a potentially pretty interesting opportunity.
Yeah, I agree with you. I mean, vol leading into this spike, vol was so cheap. You could go out to April in VIX Options, just before spikes was listed, and you could put on a 5-point back spread and get paid for it. There, 2 weeks ago, Andrew and I were looking. You could buy a March 1450 strangle for $1.60. They have allowed on, as we've seen, the VIX and spikes kind of ease their way back towards 13. They've really allowed the vol to get spanked. We saw VVIX and I'll bet you Viking would be the same, trade below 80 for almost a straight week, and that's just been unprecedented over the last couple of years. Obviously, I can't look at what Viking was saying, but I'm guessing Viking was probably right around right around 77, 76.
You know what you guys have both done now by both talking about buying volatility. You've guaranteed me an angry letter from Don Schlesinger about.
Oh, I know.
Our old co-host, our old volatility cohort, who never met an option contract he did not want to sell. He'll be reaching out to me now saying, "What are you doing talking about buying volatility?"
No, that's not true. That's not true, Mark. He never met an option contract that he wanted to buy. He definitely met option contracts that he did not want to sell. Remember, he used to say, there's those that should be sold.
Yes, sold
and
or
those
not
that should
sold.
not be
sold or not sold. Never buy.
Never buy.
Never buy. I hope I didn't say buy. If I said buy, then I'm definitely getting an angry email from him, because that would be just slander on his name, and rightfully so. Shelley, same question for you. What's catching your eye as you guys now make your way into the volatility market?
I wouldn't say anything particular is catching my eye. The one thing that I'm obviously paying attention to is how things are going to work next week from Tuesday in our first settlement. We're confident everything's going to be fine. We've done a ton of testing. Looking forward to that first settlement expiration. But we're just watching orders coming in and out of the market, and I don't have time to watch the market on a moment-to-moment basis. Obviously, I have 3 exchanges to run, but looking forward to getting through the first settlement process, and hopefully have more interest coming to the market once that occurs.
Yeah, that would be great to have one of those under our belts. We can talk about it on the show next week. I'll be curious to see that as well. Like I mentioned at the top of the show, I think a lot of people, myself included, are waiting to see how all of that unfolds. Real quick segue from the volatility space for 1 second, Shelley, since you're talking about how busy you are. I could see why that is. I just got handed the numbers from MIAX, which I believe just came out. 10% pretty much market share, 9.97% for the MIAX exchange group. And that's only with 2 exchanges, Shelley. Now you just got your third under your belt. So seems like things are lighting it up over there in MIAX these days, Shelley.
Yeah, we're very excited. Pearl hit a new high last Monday, about 6.6% market share. MIAX is holding its own. Emerald, we still only have the one stock trading, options and IBM, but we're listing SPY, Amazon, Netflix, GE for Monday, and the rest of the top 100 a couple of weeks later. We're really excited. The interest from the member firms has been very good. All the members that are on MIAX and Pearl have all joined Emerald, and we're looking forward to see what happens as we add additional symbols next week.
Yeah, I mean, Pearl seems to be crushing it. It was 2.6% market share a year ago in February. This year, about 5.7%. MIAX holding the same, right around a little bit north of 4%. And the exchange group was 7.25% last year in February. This year, just a tick under 10%. So sounds like things are moving along well. Speaking of things moving, you guys all alluded to our old friend, the volatility of volatility. Looking forward to when we have it's already been named. It's already been named the Vikings. So I guess we can't do much about it now. So we'll look forward to having the Viking. In the meantime, our old friend VVIX still showing there's some not surprising we're seeing these levels. That may be some troubled waters ahead. It's not quite north of 100 where things really start to get elevated, but it still is a little frothy, I think you could say, right around a 91 coming into showtime. For frame of reference, that's 11 points higher. We were at an 80 this time last week, which is pretty much near getting close to the bottom of the trough. You know, we've said many times there's that range in VVIX. When it gets down to about 75 is usually about as quiet or as tranquil as things really get. It doesn't stay at 75 too long. It usually bounces off of that and gets up into the mid to low 80s again pretty quickly. Now into 90 is starting to show things are starting to move. If we get north of 100, then of course we'll really start seeing things rocking and rolling out there. In terms of the futures as well, kind of been interesting to watch them kind of ebb and flow with the cash today. Right now, we said the cash right around 17 in terms of the VIX, the future, the March future, about 1740. Excuse me. April future, pretty much the exact same level, kind of unch, which is kind of weird. A little bit of a funky term structure. You noticing that as well today, Mr. Meatball? They're not pricing a lot going out to April, are they?
We've got flat. Yeah, we're flat, but then the cash is actually, we were backward this morning, and now we're kind of flat with a contango this afternoon. It's really strange. Really strange.
Yeah, we've been saying that for a while. It seemed like maybe things were straightening up again out there in the futures term structure, and here we are back again looking at the things pretty crazily flat. You can get, at this point right now, you can get April effectively for free. Why would you touch March? You get April for free. So they're pricing no premium at all between March and April, which is kind of weird. In fact, a little bit of a discount. So yeah, you were kind of weirdly backward there for a little bit. Seems like that's kind of coming in now. In terms of what's trading out there on the options front, let's look at spikes first. Like you mentioned, it's still kind of early days. We're waiting for that first settlement to come in. The big trade out there was still looks like that kind of vertical we talked about last week, Mark. I'm looking at the top 10 spikes, top 20 actually, spikes positions right now in the options. And that 2025 vertical, which we saw go up last week, is still kind of the biggest position out there. That's pretty much in line with what we're seeing out there in VIX options as well. There's a lot of love, a lot of interest in putting on verticals, finding ways to finance them. Also some puts lighting it up out here in spikes as well. The March 15 and April 14 halves, number 3 and 4 out there. So we're seeing maybe some more puts active in spikes, excuse me, than we are out here in VIX options. I know it's still kind of light days, but Shelley and Simon, anything really of note going on in the spikes options, or at least catching your eye out there? Maybe things you're hearing behind the scenes you want to let our listeners in on?
Yeah, behind the scenes, there's a few things going on. A few of the retail firms that weren't quite ready for spikes on day one are buttoning up some changes to allow the retail to have access. Some of the risk systems had to be adjusted, and OCC is working on their cross-margining capability between spikes and VIX. So those are two headwinds that we hope to go and will be gone in a couple of days or a couple of weeks anyways.
Well, that's a big one, because we know from experience, talking to others who've attempted to launch volatility products in the space, getting things lined up at OCC has sometimes been more challenging than they anticipated, and that's held up, actually delayed the launch of some products in the space. So I'm glad to hear things are working out behind the scenes over there. Let's move on over to the mothership, the VIX options over there. See, they're actually pretty active today. Go figure. Usually at the tail end of a sell-off week, when we have yet another day of sell-off, usually you don't see a lot of volume, but we're seeing some decent paper today. Coming into showtime, so these are probably a little bit higher now. Coming into showtime, there was about 481,000 contracts on the tape. ADV just a tick under 500,000, 499,000 out there. So it looks like, spoiler alert, probably going to beat the ADV today, which would be interesting. Looks like the biggest trades coming across are, let's go talk about the top positions out there first. We'll break down the top 10 in VIX options land. We'll start at the bottom. Our first and only put actually on the list, which is why I mentioned more puts lighting it up in spikes, at least big top 10 position wise than we're seeing in VIX right now. Only one in the top 10 in VIX, which is the March 15 put, 184,000 contracts. Number 9, the April 23s, 185,000. Number 8, the April 27s, $1.99, just a tick under 200,000 there. Number 7, the April 26s, 214,000. Number 6, April 24, so pretty much April call strip, 223,000. Number 5, the April 45s, the comparatively optimistic April 45s. Number 4, the May, first May on the list here, the May 37 halves for about 250,000 contracts on that line. Number 3, the March 20s, 253,000 contracts. Number 2, April 30s, about, again, the 30s, always got to be a 30 somewhere, 261,000 contracts. And number 1, the April 20s with 270,000 contracts open. Total OI pretty strong as we're getting into settlement time and things that'll start to go away. But nearly 10 million, 9.25 million open out there. Looks like about 7.4 on the calls and about 1.85 million on the puts. Mr. Meatball, anything catching your eye VIX options activity wise this week or today, sir?
Yeah, there was a big April 37.5, June 70. Call 1x3. I'm going to go ahead and let you guess which side the customer wanted to do. And that was the biggest trade. We also saw a huge amount, interestingly, kind of on the vol lows yesterday, we saw a customer just dumping March puts. Sold the 15s, the 14.5s, and the 14s. They all came in within about 10 minutes of each other, all sold. So that was kind of interesting. And then, there was a big April risk reversal that went up, basically put spread with call, or naked put with call spread, excuse me. And obviously that was looking pretty good this morning. That's a very popular one. Although, I like that trade as a hedge here more than I would now that VIX is 93. That VVIX is like around 90 / Viking is around 90. And I like that trade a lot. 2 weeks ago, I'll say this again. If you can do a 5-point back spread in VIX and with about 60 days to go and get paid for it, back up the truck. That's a great trade.
Yeah, you've been on that for a while.
So which side do you think the customer wanted to do? Do you think he wanted to buy the April 37s and sell the June 70s 3 times? Or do you think he wanted to sell the April 37s and buy the June 70s 3 times?
If he sold it and bought them, I want to sit down with that guy and really maybe walk him through risk management, because you got a lot of runway between, 35 and 70. So I'm going to go out on a limb and say he bought it for his own sanity.
Yes, he bought the April. So good news.
That would be a guy who's, if he did it the other way, he's been listening to this show for a while and taking the exact wrong message from it the entire time.
Exactly.
How many times have we seen people start to mess with those short ratios, But yeah, 30 odd handles. God, I hope not. That would be pain. Imagine what it takes to get those 70s to kick in. I mean, they'll start kicking in faster than probably you think, but not enough to offset the pain.
You would need like a 2008 type of event for those to cover the 37s. I mean, it's just the way he was. I think there's more of like a cost mitigation thing, but I'm sure the market makers gave him a great price on those 70s.
Yeah.
Or if it was facilitated, I'm sure he didn't pay $5 a contract in commission.
Either way, I'm not a huge fan of dumping 3 of the 70s. How much are you getting for those? I'd have to look. Oh, they're 12 cents?
Yeah. So
what would your risk manager, Mr. Rock Lobster, do to you if you tapped him on the show and said, I want to buy this, but I want to sell 3 of these for 12 cents? What would his one eye look like?
He would probably freak out.
Probably.
It would be Yeah, it'd be kind of like the Terminator is what it would end up looking like.
And rightfully so. I don't know, Simon, have you noticed this kind of trend in the vol space as well? This is the trend we've talked about a lot here on this show. In a lot of products, VIX Options shows it the most, but we see it in others as well. Kind of these people looking to get these, funky bullish exposures. In particular, there's a lot of interest in certain times in VIX Options around kind of short ratios where they're selling one call, usually around or a little bit out of the money, not as far out as 35. Usually it's a little bit closer to at the money, let's say 5% out of the money. And then they're buying usually 2 more, like, maybe 5 or 10% out of the money, something along those lines, and doing that for some sort of credit or maybe a small outlay. Have you noticed that trend as well in the volatility space? You've been trading, obviously, VIX Options for a while. And what are your thoughts on that strategy, A? And then B, do you expect to start seeing that similar flow showing up in spikes sometime soon?
So absolutely we do. Yes, so we know that will happen actually. So we're excited to have the first such roll go ahead on that. In terms of that question, yeah, look, we also, maybe it's a guilty pleasure of ours, but we do the 1x2 call spread occasionally. So I think part of the reason for that is that it carries very well. That was a trade that became very popular from around about 2011, and a lot of people were doing it. But then there was a period where it just performed extremely poorly, and so you heard of it a lot less for a time after that. I actually think if you choose your strikes correctly, you can actually do that pretty well. As far as the trade that Meatball just talked about, that's actually, I think it's more interesting than perhaps both of you two think, so a slightly different viewpoint. If you think about 2008, I think the high was around about 80, if I'm not mistaken, and the futures would have been well below 70. So the sale of that 70 would require something astronomical to happen. So from that point of view, it's not such a bad sell.
No, but from a haircut perspective, you've got to be massive to carry any kind of VIX upside naked. Otherwise, they just absolutely destroy you at the clearing firms. They're all terrified. So, I don't hate the trade, but I just think on both ends, especially being short those, unless you're a very unless you're trading this off a variance or a big credit book or, using it as a hedge where you're strategically placing things, or maybe it's against some structured product. Who knows, right? It's definitely not just on an island, right?
I think so too, and I think the fact that it's calendared as well might mean that the person actually will unwind that at the same time as the other one expires, potentially.
Yeah.
Because obviously, prima facie, it looks like a pretty absurd trade because the long rolls away. Now you're short these 70 calls.
Right.
It's over June too, which is the summer period. Normally there's a low in vol in general.
Yeah.
So maybe it's a strategy which you'll take off together.
I would hope so. But yeah, I mean, if I was the market maker and I did, I obviously if I had a big book and it fit me, I would do it. But if I just called up, my risk manager and said, "Hey, I just bought 500 April 37.5 calls," he'd be like, "Hey, good job." And then I said, "Oh, but I sold 1,500 the June 70s." He'd be like, "And you need to come to my office."
True.
So just but obviously this is a fun, and part of the reason why the market makers are willing to do this trade. Just kind of flip this around from market maker side and from houses. Those 70s, they'll never become really useful, probably, but they do provide a lot of upside bullets that then protect you to sell other things that you want against it. That'll give me a lot of haircut runway as a trader. So that's why they want it, but that doesn't mean that the general public should do a trade like that.
It sounds like Simon wants it. Sounds like Simon might be getting some little 1x3 action. Maybe next show, Simon, you can come back and regale us with your stories of putting on this 1x3 spread. It sounds like this is up his alley. Interesting.
Yeah. You know what trade I did this week that Simon will like? Yesterday on the low. So we're only down about 13. They let me put on the 14.5, 14, put one by two for a nickel credit. I was kind of shocked I was able to get it off, but I really was really proud of myself for getting that done. So what do you think of that one?
Yeah, I do. I like that trade. I like it a lot. You're right.
I like that. I think Simon's gonna fit in well here, Mark. He's diving in. He's going with some branding names. He's liking obscure, very crazy VIX trades. So all sorts of fun stuff.
I can't wait. I can't wait until we can talk about.
Yeah, I'm with you. I can't wait till we can talk about some of these size ratios and verticals. I just love. I'm looking forward to comparing and contrasting. Once the flow starts kicking in, the spikes, to see if we're seeing the exact same stuff, or maybe I expect that we will, but you never know. Might see some totally different strategies start playing out there in spikes that we're not seeing, or maybe a different flavor, a different twist. You know how we'll know, Mark, when spikes is taken off is when 50 Cent starts trading the spikes, right? That's when we know.
Yeah, that's true. When we see those go,
because that'll give the Journal something to write about, because they love writing about 50 Cent, and then everyone will be happy. Let's move on really quickly to our other friend in the vol space. A lot of you guys like to trade. This is our old friend. Talk about branding. This is just still doesn't roll off the tongue. VXXB. Yes, they're keeping that B, it seems like, which is just not a choice any of us are super enthused about. Coming into showtime, it was right about 34, about a little bit north of 34 right now. It's a little bit south of 34. So up not quite, a little more than 2 points from where it was this time a week ago. We talked about as many times on the show. We know a lot of you guys like to favor the downside in VXX with puts and things. We talked about how painful that final expiration for VXX was. A lot of you were south of the 30 strike with those puts. We know that. We feel your pain. Didn't quite happen. It happened again this past week where VXX, or VXXB, I should say, was flirting. I think it actually broke 30 ever so briefly and then exploded back up as the vol exploded back up, and here we are back around the 34 handle again. So all of you who continue to pile into the south of 30 puts continue to have, unfortunately, sad developments every week through expiration. Let's look here really quickly, real quick rundown for what's open out here in VXXB. Let's just go from the top really quickly. Number one, actually some calls. So some people starting to get some call love out here. 32,000 on the March 45s, number one. Number two, the June 80s. That's very optimistic. About 30,000 of those. Number three, the March 29 puts. So a lingering in there, 28 to almost 29,000 of those. Number 4, the March 43, so some more calls, 28,500. And let's just go down to 5. Number 5, the March 70s, also optimistic, 25,000 of those. I'm going to go out on a limb and say the 29 puts and the 70 calls probably not going to happen, but we got time. 29 puts have a chance. They got some time. Those are not weeklies. Those are actual March, so we'll see. About 1.25 million contracts outstanding out there, about 800,000 in the calls and about 450,000 in the puts. It's like the big trade out here this week in VXXB was, looks like a June 30, 25 put 1x2. Mr. Meatball, tell me if you like this one really quickly. Looks like they bought the June 30, 25 1x2, 1,500 by 3,000 times to put 1x2. Looks like they did it for 245 and 70, so about $1.05. You like that one?
I don't hate it. I usually like to kind of arrange those so I don't have, so they produce a decay. But, it's not a bad little play as long as VXX stays above 20. Now you're saying, oh, well, it's 33. Where's VXX going to go? Well, here's the thing to think about. If we get a perpetual 13 VIX for 2 months, VXX will lose well over $10. That position could take some real heat. And it starts to take heat really around 26, 27, not 20 like a lot of people think. Those 1x2s really are a lot more, there's a lot more to them, especially that far out. I would want to get paid. That's just me.
Yeah, that did seem a little odd to me, too. And I was going to joke. I said, the one way you can guarantee that it's going to break 30 and do it in a hurry is you do 1x2, right? Then all of a sudden, it's going to explode through 30 and not look back and maybe cause some pain along the way. But again, you got some room here. You got some runway before that one starts to cause pain. But interesting stuff here. Some interesting plays. Meanwhile, speaking of interesting, we don't even have time for your interesting mail this week. So much to talk about in the vol space. There was some earnings going off this week really quickly. We saw Costco and a few others. Don't even have time to do earnings volatility. Jam-packed show here this week. Let's keep on rolling, though, with the most challenging. Simon, I hope you put your prognostication pants on, because now is where things get challenging. It's time to go into the crystal ball.
It's time to peer into the future and reveal what the volatility gods hold in store. It's time to look into the crystal ball.
All right, everybody, welcome to the Crystal Ball. This is the portion of the show where we routinely embarrass ourselves for your own amusement. But every now and then we do surprise you guys with how close we were. This week, not one of those. We've had a lot of bullseyes of late, so we've been doing pretty good. I was feeling the right direction, just not to the, shall we say, right order of magnitude out here. Last week, Mr. Meatball, you were feeling to the downside to the tune of 1305. I was feeling a little bit more vol, but clearly not enough. I was up at a 14.5, and coming into the end of the showtime, we're still a little bit shy of 17. Remember, that was a general kind of prediction now, too. Simon and Shelley have made it more difficult for us, because now we have to pick 2 indexes, not just one. We have to pick spikes, and we have to pick the VIX Cash. So luckily, they're relatively in lockstep, relatively close. So that makes our job a little bit easier. Let's see where spikes is going out here as of the end of showtime. 16.5. Oh, so I like that a little bit better. I'm within 2 handles then with the spikes. I was closer on spikes than I was on the VIX Cash. Unfortunately, our rules here, Simon, are that you got to be within a handle to at least even consider it a victory. So no victory for me this week, nor would I take it, because 2 handles off is not the thing. So Simon, since this is, I won't ask Shelley because I know it puts him in a bad spot as our resident exchange man. But you're the T3 man, so you should be able to play with us. You have 2 duties this week. You can prognosticate both spikes and VIX Cash. Luckily, the levels are similar enough. You can kind of do both. So what are you thinking for this? Not market close, but this time next week, the end of the show. So roughly 2 p.m. Central here. What are you thinking for VIX Cash and spikes this time next week, sir?
I think they will both be proximate to 15.25.
Interesting. So seeing the vol come off a little bit, but still not near where we were even a week ago. So not all the erosion kicking in. I kind of like that. I think I can get behind where you're coming from on that one. I will go next because I was the closest. Meatball was a distant third on this one. Let's see, 15 and a quarter. This is why I don't like going first, because he took a nice little spot there. But let's see. I was 14 and a half this week. Excuse me. A little bit shy of 17 coming to Showtime, 16.5 on the, or ending the show, I should say, 16.5 in the spikes. 15 and a quarter is not a bad level. I don't want to crowd Simon on his first show here. So I'm going to go a little bit shy of where I was this time, a little bit north of where I was actually this time last week. I'm going to say 1475. So north of where I was last week, but south of where we are right now. I bought you some time there, Mr. Meatball. So what are you feeling? Go ahead. You can say it. You can say 12.
I'm not going to say 12, but I can literally feel the suck coming out of VIX right now, and for that matter, Spike. They tried so hard to run vol hot today, and they couldn't, and they've been unable to really tank the market. And despite all this terrible news, I think we're going to be green all next week. I think you're going to see aggressive vol selling, and I think that we're going to be. What did you guess, Mark?
1475.
All right, you gave me plenty of room. I'm going to go 1375.
I had a feeling you would be south of me. It's kind of your way. When Russell was on, he used to always be north of me. These days, you are always to my south, sir, which hasn't worked out so, but once in a while it does. Once in a while you hit a bit of a home run. So there you go, listeners. We've got Simon up at the top there, 15 and a quarter. I'm a little bit shy of him, 1475, and then the Meatball, 1375. We're seeing maybe spikes come in and maybe a little bit faster than the VIX. So maybe there's something to that as well. Maybe that's something we could explore, perhaps on a future program. There we go. Unfortunately, though, that music means we've come to the end of this epic journey through the world of volatility. What a journey it was. We talked all the mechanics, the spikes, all the fun stuff going on there. We talked about the volatility of volatility, talked about VIX options, spikes options, VXXB, all the fun stuff. If you sent questions in, I apologize. We'll get to more of you next week, I promise. But before we go, Shelly and Simon, if our listeners want to learn more about spikes, they want to figure out how they could trade it, maybe they want to just get some information about how it's constructed, where should they go? What should they do?
Go to www.myxoptions.com and click on spikes, and everything you want to know about spikes is there to read.
There you go, listeners. myxoptions.com/spikes, S-P-I-K-E-S. We had a listener write in last week. What's the ticker symbol? It's just Spike, S-P-I-K-E. So if you're looking for it on your brokerage platform, just type in Spike. It's pretty easy to remember. And hopefully someday soon, Viking. That'll be a fun one as well. And really quickly, Simon, you mentioned all the stuff you guys are working on. You want to leave our audience with any teases until next week? Now is the time, sir.
No, I'm going to leave it. I'm on the show for a couple of weeks, so I'll do the reveal next week if that's okay.
Ooh, a big reveil. I like. Look at this guy. He's already leaving teases for the. It's like he's been doing the show forever. This is. I'm excited. I'm excited for this. All right, and last but not least, Mr. Meatball. If I want to learn more, maybe about how to manage volatility, maybe I want to trade some volatility through a volatility fund. Where should I go? What should I do, sir?
Yeah, if you're looking for a smarter way to hedge, to be long the market and have an underlying volatility hedge, and you're an accredited investor, obviously reach out to me, Mark at Carmenline Capital with a K, and I'd be happy to talk about our smart S&P strategy. And if you are a certified financial planner, our upcoming class at Option Pit, options for investors, money managers, and registered investment advisors, now counts for 12 continuing ed credits with the CFP. So if you are a certified financial planner, you can take this awesome course that you want to take and get 12 credit hours against it. The cost is $987, but use code CFP300, and I'll knock off $300, not points, $300 for OI listeners. So make sure you check out that class, and you can learn to trade from really the master of meatballs.
There you go.
And
there you go. the master of making meatballs and volatility masterclasses.
Yes, go to optionpit.com/master RIA.
Speaking of winning in deals and such, I see Neil Wales listening live there in the chat. He's still hitting me up about your book, sir. So you got to send Neil his book. He's in Australia or something, I believe.
Oh, I will send him his book.
So he's asking me about his book. So get the man his book. He wants to read your words of wisdom. Your words of wisdom.
I know. Tell him to email me again. I forgot. I sent the other two out. I have one more. I forgot I had one more.
He did have that. I believe that pretty nice bullseye. I think he was like exactly on with the VIX
I think
Cash,
he was pretty close.
The man earned himself. So there you go, Neil. I'm standing up for you here. Get the man a book. He earned it. And on behalf of myself and the Meatball and Shelly and Simon, I want to thank all of you for downloading, streaming, subscribing, for listening live, or sending in questions. Again, I promise we'll get to more of them next week. Don't worry. And we'll see you back here next week for more Volatility Views.
Volatility Views is brought to you by MIAX, one of the fastest options platforms in the world. MIAX is now trading options on the SPIKES Volatility Index, offering pinpoint accuracy, radically faster dissemination, and a highly transparent settlement auction for confident trading, all for competitive exchange fees. It's time to make a change and give yourself an edge with SPIKES. Learn more about SPIKES at www.miaxoptions.com/spikes. Options involve risk and are not suitable for all investors. The statements made are provided for information purposes only and are not intended to provide and should not be relied on for financial or legal advice.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/The Options Insider, or via questions at theoptionsinsider.com.